Okay, we're gonna go over the trades basically that I've taken last week. Last week was very weird in the way that price moved, like especially with gold. I think it's pretty much with all currencies and everything, but with gold especially moved crazy. I mean, we had an Asian session moving about 50 to 80 pips, which in usually Asian sessions known to just consolidate. We basically got stopped out of our trades and then price hit full TP, so either that was me not, bad analysis or bad entry from me, or should have had a bigger stop loss, but either way it was a bad week of getting stopped out of break even or hit stop loss. But when we did get in a trade, it did it full TP, so that's pretty good. Here, and I think we took a sell at here. This was an Asian session. No, it wasn't. It's in London session, sorry. London session short we took here. I think we had stops just above here. Price sweep, Asian highs, pushed up to this order block here, right here, 15-minute order block. So I looked on the 1 minute, saw a good rejection come off here. We then left a nice 1 minute order block here, and I think also there was a 5-minute order block as well. So we entered, I think I entered it after the drop. I think I entered about here with stops at the top of this. And so we were targeting this low here. So this was the trade. Got a beautiful straightaway good reaction. We were in, good amounts of profit to begin with, and then I stupidly decided to put my stop loss at break even here, which means we got tapped out of break even, and then price came all the way down, ended up hitting our TP. I just want to be safe on the trade, but especially with the price action of last week, it was hard to know when to set your stop loss to break even. For example, like 2033 to 2031, so we're running about 20 pips, so that's usually when I feel comfortable to put my stop loss to break even, because I think if price comes back again, it most likely will hit me on my stop loss. So that was the usual stop loss break even to me. Just unfortunately, then we had price come back up, hit us out, and then go all the way back down. But that was a good setup in general of sweep of the Asian highs. Order block on the 15-minute. I am going to be more lenient with when I put my stop loss at break even from now on. I probably will run it after 40 pips instead of maybe 20 pips or 30 pips. I'm going to try 40 pips, stop loss to break even, and then let the trade run. But then again, I'd rather have my stop loss hit a break even rather than stopped out, minus 1% on my trades. Pretty sure, yeah, that was market open on Sunday. So as I said, like last week was, even for Asian session, extreme volume. Like as soon as market opened, we had a straight push from 2018 all the way to 2028. So we had a 100 pip movement in half an hour, and then came back down and then pushed even further up until about Asian start of London session. So that's like 200 pip total movement in Asian session. So that's proof that last week was just fuckery. Can you show us how you mark out your order blocks and what OB time frame you take trade off, 15-minute or 1 hour? Okay, so the ones I look at is definitely the 15-minute or 1 hour, and then on lower time frames I want to see a strong rejection on the 1 or 5 minute. So I want to see as soon as it touches my order block in the 15 or 1 hour, that I see a strong rejection off it, and not just a straight powerful bullish or bearish candle straight through it. Now, I wouldn't trade an order block that's that big, so I'd want to go to the lower time frames and see any better entry points that I could find, rather than entering in the equilibrium, either not getting tapped in or entering and then having like a huge stop loss all the way down here. I'd rather look from the lower time frame, look for a better entry to get in. But again, guys, I think I trade ICT or SMT or stuff like that. I've looked into them, but I did not learn off them. I learned off my own kind of backtesting and all of that ever since I started trading about 6 years ago. I did not learn off YouTube videos or anything like that. The second trade was basically just a sweep of all these 3 highs here. So if I think on the 1 hour, it was here, yeah. So this trade we entered here. Here is where news came in, swept this one. I thought news was going to push up and take out this as well before coming back down, but it didn't. News came straight back down. That's why I didn't enter there. It only took out this buy side liquidity here, but I waited for price then to come back up, take out all 3 of these buy side liquidities, then find an entry point back at that level. You know, strong rejection on the 15-minute. We look at that, basically 50% rejection candle on the 15-minute, indicating that price will start to push down. I think I entered here off a fib golden zone, because there's a market structure shift, and then pull back into the fib golden zone. I entered off here, I believe, but with that trade, I think I remember we entered here, stops at the top, and then I targeted this low here. But with this trade, stupidly, I moved my stop loss. Price is here, and I moved my stop loss back to 2037, thinking that price would just continue coming down. But price would trace back up, hit us out up here, so 1 to 0.66 risk to reward. That was the thing. Closed us here, and then came straight back down. So that was my bad in kind of setting my stop loss too tight to where price was. I should have kept my stop loss at break even and waited for price to move further down again, or I should have put my stop loss, you know, a tiny bit below entry rather than, you know, 10 pips away from where price was, because that trade would have been I think a beautiful 1 to 4 or something, 1 to 5. Okay, that was our second trade there. Third trade, okay, this one was crazy. Right, so I had a 1 hour order block marked out here. Yeah, okay, and this was news. News, I think some people entered sells off this fair value gap here. I don't like entering off fair value gaps because I think they're too unpredictable. I mean, you can create, you know, a bullish trend can create 10 fair value gaps. So where are you going to find your entry? So I don't like entering off fair value gaps usually. Inverse fair value gaps maybe, but fair value gaps as it is, I don't really like entering off, so I wouldn't have entered off this fair value gap here. It reacted nicely back here, you know, it came back up, fair value gap straight back down, but I waited for price to sweep this and then come into my 1 hour order block here. As you can see, it did perfectly. So I entered a sell, and I think if you guys remember this, I entered a sell perfectly here. It starts at 2050, I believe. Targeting exactly where it's there. Enter stops there, but then news was coming out in 20 minutes, and we hit perfectly here, right on the snipe, and came down beautifully. But then, you know, news was coming in, so we just had consolidation the whole time. I didn't want to risk going through my stop loss and, you know, losing money on spreads or anything like that. So I made sure that I closed the trade before news came out. And so right now, guys, we've missed out on like a 1 to 15 in total, just because of bad stop loss placement or either news coming in. But all through the trades, the analysis was right. So at least you can back up that, you know, you knew what you were going on about. Okay, next one was a short in Asian session, which I think a lot of you missed out on, but that was a very tight stop loss, and it actually did hit full TP on this trade, or maybe just I think I did it a bit before. It was like this. So this is a tiny little scalp trade. It's because it was in the Fibonacci golden zone on the 15-minute, and also I entered off the fib golden zone on the 1 minute as well. So the 1 minute was a fib golden zone, 15-minute fib golden zone, so I entered off there. Perfect trade. Next trade was, it was a news trade. I entered off a 5 minute I believe. Yeah, it was a 5 minute order block here. Let's have a look, see if I can see it. Yeah, I entered off this 5 minute order block here, thinking that it would actually, I thought this would be a perfect trade. To be honest, I did not expect price to push any higher than it already had, because it already took out these 3 highs here, and then it even took out that high again, and then it even took out another high again. So I thought this was going to be the weekly high. This wasn't going to break, so I thought a perfect entry off here, it would have slammed straight back down, but clearly price proved me wrong. We got a stop loss hit here, minus 1% on that trade. That was a poor trade. Next trade was this trade, long position. I think we took it here. Pretty sure we took it here. It was I think it was a 5 minute OB again. 5 minute OB here. Entered off here. Stop loss 2029.5. Yeah, 2029.5. stop loss 29.5. I was targeting 2040 here. So this trade, I think you guys remember this trade probably. We entered, it came back up, we set up to like here or here, set our stop loss at break even, came back down, took us out at break even. I then did a re-entry because I thought this was going to work out, this trade. Re-entry, came back up again, stop loss to break even, stopped us out at break even again. News came in, flew up and hit our take profit perfectly. That trade really annoyed me. I definitely look if it's a bearish or bullish bias, but for example last week it was neutral. I think there was no really bearish or bullish bias that you could notice, so I was happy taking both buy and sells last week, because the price was literally just going up, down, up, down, up, down. Trade on Thursday, this was a beauty. This was news, came in very bullish, pushed all the way up. I think this was a 4 hour, I believe. Yeah, so we had a 1 hour order block here, and then also a sweep of these two highs here. So I wanted price to sweep these two highs before I'd think about entering off this order block here, and see sells here, and we got a lovely entry, I think a sniper entry on this one, at 2064. I believe it was 2064. Lovely. And then our first TP was 2055, which hit pretty much straight away, which is a 1 to 5. And then we had second TP at 2047, which hit the day after, which was Friday, which hit from news, and that was a 1 to 9. Probably not, because I think I did my stop loss a bit higher. I think it was like there, so 1 to 7. That was a lovely trade right there. I was happy with that trade. Made like 6% on that trade alone. So that's why good risk management comes into place, because you can take loads of break-even losses on 1% losses and stuff like that. If you then hit a good trade like that, one good trade on Thursday with a 1 to 7 RR, you make back all your losses during that week, plus you gain some more. And that's why if you good risk management does matter. You can't take 5 losses in a row losing 5%, and then when you're in a winning trade and you close it at a 1 to 2, you only made your 2% instead of letting it play out and get more than your 5% you've lost. Was our Friday trade. I took a long off this order block here at 32, stop loss at 2029.5, TP was 2039. Again, shouldn't have probably entered, because what the fuck did I just do? Shouldn't have entered because of news. I think it was NFP on Friday, so that probably shouldn't have entered then. But price swept here before reacting, and reacted to a 15-minute order block down here instead, and came shooting back up. So that was just bad. I probably shouldn't even enter the trade the whole of Friday, to be honest. It just looked like a good setup, and I thought it'd work out, especially with the strong bullish push up. I thought it was gonna come back down, and then retrace back down and come back up and push further. But yeah, last week was shambles for me. But overall we were up overall last week if you took all the trades. But yeah, that was a week's trades.